Alright, hello folks, I'm LA, and this is your weekly TA wrap. We take a look at these markets, and we do it from a neoclassical perspective, each time asking ourselves what happened last week, and what does it tell us about the coming one. I do show every Sunday night live at 9 o'clock Eastern Time here from the base of the Rocky Mountains. Folks, kind of distracted there at the beginning. I was off doing some other stuff and then realized it was time for the show, so a belated hello. Let's get started. What do we say about this market? Well, it just keeps going up. Last week we had a little bit of a pullback, if you will, that took place in the S&P. Started to actually across the market, started on that Monday down off of the Russian scare, and then the market just flipped around. Took it all the way back up, takeaway bar, two bars together, bar down, bar back up, forget it, we're going higher, right? And then it just kind of hung up there the rest of the week. So on a weekly basis, right, and I'm going to flip to the weekly for most of these charts. On a weekly basis, it just looks like more up, right? So you kind of have that V shape, a little bit of a correction down, and then a V-shaped move back up, right? And now it's just kind of grinding higher, a volume a little bit lighter as it's going up. But we've seen these kind of V-shaped moves before. Sometimes they crawl higher and then come back. Sometimes they go on farther up, right? So question is was this enough of a consolidation over a long enough period of time? And basically, it was from December until middle of February before we actually took off. So you had about 2.5 months consolidation, 6 weeks. 6 weeks usually is a pretty good period. If you go back and look at these, a 6-week base is not a bad base to work from. If we take this base, for example, you're talking about July to the middle of September, that's roughly 6-7 weeks. Then you get your breakout that carries. So you kind of have the same thing going on here. So from that perspective, certainly this doesn't look overbought on a weekly basis. And that's true of all the indexes, although there is a little bit more of a stretch on some of these. For example, if I look at the NDX or I look at the NASDAQ composite, these look a lot more stretched. And let's bring in the weekly here and look at it on a weekly. So here you have, the base is about the same, but the move up has been more deliberately bought over and over and over, right? There hasn't been much of a correction here as to what we just saw. The only real correction in all of 2013 really was this one piece on the NDX itself. In other words, that May to July period, that was it. The pullback you just saw in the S&Ps, the other one was here, nothing here, right? The other one was over here, nothing really here, right? So this This from July until now, or until this last pullback, has been a straight up move on the NDX, also on the IXIC, on the NASDAQ composite, and even on the Russell, other than the one move back down here just like this. So, is that enough of a consolidation on this particular chart? Well, after 6 months of up, I'm not sure that it is, but we won't know that until we actually see this thing fail and come back, if in fact that's what it's going to do. So far, it's all positive, has been positive, doesn't want to change. The issue, if there's an issue, is that it's not clear what can take it that much higher. And I'm going to look at each of these sectors with you on a weekly basis. And so here's a weekly on the IYT, the transports. Breaks over the high. That high was, and it really wasn't a swing point high. It was just the high. There's 2 million shares there. You break over it to about 2 million, just slightly less. So you're over it. Can climb higher? Yeah, I guess it can. Here you can see the kind of consolidation, stair steps type stuff that we saw in the S&Ps, right? Up and back, up and back. And this is the sort of stuff that allows you to get a larger move going, right? And that's what it did. Now, is that the same sort of thing we're about to see here, right, where this thing does the same sort of consolidation up and back, or does it just continue higher? I would argue that these types of charts, once you make your extended move, then you kind of have some sort of a range, and that range can kind of be, tilted to the upside. I mean, maybe this will be tilted to the upside, but it doesn't, we don't have the kind of consolidation length that we saw back here at this price point yet. Maybe it doesn't need it, maybe it does. I suspect it does. So, from that perspective, I'm just saying, as we walk through these sectors, you're going to see most of them need some sort of consolidation. Semiconductors, same sort of thing. Yes, there was some kind of consolidation back here, right? And then you had a nice big strong stretch higher, right? And now kind of needs some consolidation again. Will it be up in this area? Right now there's no indication of it. All we're looking at is the fact that we've had a nice big strong move. You got a little bit of a correction. Now you get a fast move higher. Doesn't want to stop yet, but just like all other fast moves higher, just like this one, eventually you will see it start to try to struggle to get higher, right? And then you'll start getting some sort of consolidation. Let's keep moving through these, because the strongest ones are like the semis, and the XLE isn't one of those. You can see the back and forth. Now you're back up there trying to test the highs. You're coming into it. You have decent volume. This one's going to try to test those highs. Let's look at the XLB though. The XLB has been a very strong one. This broke out, and you can see the kind of move here again. No consolidation. The consolidation was back in this area. Once you got over it, it was a straight up move. Oops, let's change that tool. So you had a straight up move after that, right? Now, where's the consolidation? Well, it started it, but then it gave it up and it's going higher. So will it be a higher, broader consolidation like we saw before? I suspect you're going to see the same sort of thing. And this one is notorious for these kind of pullbacks. This broke out on the weekly, broke out on the monthly, broke out on the daily. So, the strength is here right now. And I don't know that this is one that's going to correct a lot to start with. But again, that's a fast move. And those fast moves, just like you saw back here, they do tend to consolidate once they run too far and too fast. And that consolidation doesn't imply that it's negative. It just implies that you've gone to the point where two things are happening. One, the supply and demand equation doesn't support greater and greater demand at the higher and higher price. That's one piece of it. And that's because the valuations, which is the other piece, are just not that great anymore. I mean, if you go up 10%, it's hard to argue that the valuation is still there as it was 10% cheaper. And the only way it is if in fact those companies and that general market has greater sales coming forth or greater margins. Well, we know the margins aren't increasing that much anymore because we've already stretched them as far as we can, or at least stretched them a long way towards what you can, theoretically, by not hiring people, by increased productivity through various means. So the only way that you're going to get the valuations to take these markets that much higher is to see the sales increase, and that has, for the most part, been difficult. Therefore, consolidation would make sense up here unless this economy really is taking off. And there are some who will argue that it is. There's others who will argue that it's already pressing back into a recession. The economic numbers last week were certainly better than we've seen the first 2 months of the year, but I don't know that we can project those yet to assume that we're going to see 3.5–4% growth. I mean, we haven't seen that kind of growth for 5 years. Actually, we haven't seen that growth for 7 years. Maybe it's coming. Maybe that pent-up demand is there. Maybe the consumer is going to drive this next leg of the economy fast as a result of the fact that they feel increased wealth as a result of their housing coming back and a result of their stock market portfolios coming back. Those are economic decisions that the consumer will make. Will they still feel, I guess the thing that if you flip it around and you talk to the other side of it, so far, this has probably been one of the most hated stock markets I've ever seen, one of the most hated bull markets I've ever seen. Nobody trusted, and nobody still trusted, even up here. I mean, folks, take this one, for example, and pull it back. I mean, this is a phenomenal run. I'm going back, these are 5-year charts. Going back 5 years, this thing has gone, and, it's just been pretty much the last year and a half straight up. Now, have those valuations changed that much, right, to support a move from, in this case, 32 to 9, almost 50? So you got almost a 45% gain. Is that a proper valuation compared to what it was a year and a half ago? It's a hard argument to make, I guess, is what I'm implying. And so, as we get stretched and more stretched here, I think it gets harder and harder for these markets just to continue to climb day after day. And that's why you expect consolidations. Let's keep going here. XLF had a nice big week last week. Going back to the weekly here. So got over the swing point high, broke out on the daily, broke out on the weekly. Volume was good. This one does look like it can try to leg higher. Now it has, on a daily, has already met its projections, but now you have a breakout on 2 time frames, and that suggests 2 to 3 bars on the longest time frame, which is this one. So I would expect this thing is going to be a source of strength over the next week or two. So look for the XLF to help. If that XLE that we just looked at kicks in, then the S&P itself is going to be able to continue to try to push higher in the face of stretched valuations, so to speak. Because those 2 sectors are the big sectors, and they haven't stretched nearly as much as the others quite yet. XLK, now talk about a stretch one. This one just keeps going. Again, I don't want to harp on it too much, but it's the same thing. Big consolidation, long period of time, leads, when it finally breaks, leads to a nice move. Is that the extent of the move and we're going to consolidate again? Or are we just going to simply keep working higher? It's hard to say right now. Right now, you have to, with everything, and I don't want to sound the bearish bells here, right? But with everything, this trend is clearly up. Has been up, still is up. The only question now is, are we going to get some consolidation? Because consolidation requires you to trade it differently, right? It requires you to sell, not buy every time. You don't buy every breakout on a consolidation. You actually sell the tops and buy the retraces. That's a different trade, right? There's only 2 types of trade, really. right? There's either a breakout, right, or there's a retrace, and everything else is a subset of one of these two. It's a different trade to buy breakouts than it is to buy retraces, and what you have to decide is which one of those are you in. Is it the breakout that you're in so that you buy these breakouts, or is it retraces that you let it come back in and then you buy the retrace? I'm suggesting that potentially it's the retraces that we're going to be interested in, or that you should be interested in, because we've already had the moves up, right? And that consolidation likely is probably about upon us here. Let's keep moving through these. XLY. Yeah, this one actually got back to the highs, broke out. There's nothing bad about these charts. They still look good. It's just that I think they're getting up to the point, like look at the XLV. They're getting up to the point where it makes it harder and harder to keep going up. XLU has actually had a nice push back to the top side and broke out of that range, got the 2 to 3 bars, right? This one 2, and there was a third one. Now it's pulling back. This is on a weekly, coming back to do a retest regen. Had some members asking about this one last week. Let's look at it a little bit more closely now that we got the weekly numbers in. So what do we have here on that weekly? We got 60.5 into 48 into 59 into... See, you're doing more volume as you're coming back in. That's on a weekly. That suggests that you're going to test lower. And I would think the bottom of that retest regen is probably where you want to look. So this was the last one that broke. When you're looking at the retest regen, you want to look at the last one that broke if there's multiples. So this one had a lower high than this one. So this was the first one that broke, then this was the second one. So the second one is the one you're looking at. The low on that second one is 39.07. We traded down to 39.90, 39.52. So maybe 50 cents lower would be the place to examine it again in terms of where it might want to trade to. And given that it broke 2, if it can't hold that first one, then you're almost certain that you're going to try to get to the bottom of the second one. So that would be down here on this bar. And so, you gotta measure it as it comes back in here and decide what to do with it if you're going to trade it higher or not. That's the XLU. That has been one of the weaker ones, but now, as the valuations get stressed, those 3.5%, 4%, 5% dividends look a lot better, and I suspect that's what's going on here. Talk about dividends, XLP would be the same. So if we look at the XLP, same sort of thing, nice big push up here. That one looks a little stretched, coming into resistance. I expect this one's probably going to pull back. But then that pullback on the retrace, this may be a place to go. This chart, again, talking about consolidation, this chart looks a lot different than the charts we've just been looking at. Remember, you had that huge run straight up on this, right? Everybody was piling in the dividends. Then it consolidated for about 7 months, good 6 months there. What is that? 1, 2, 3, 4, 5, 6 months. You poke out, still can't quite get going. You come back into that same range again. Volume expands, but still it's not that big compared to what it goes into there, into this area. Now you come back up, some sort of a small retrace, maybe back into this area here. Might not be a bad place to think about these for a test of those highs and a potential another breakout over time. So XLP is not a bad looking one. And you got the dividends, so if you're thinking longer term, it's not a bad deal. Okay, let's look for a second here at the world markets. I'm expecting they're going to show us about the same thing, and that is that most of these are trying to move up and test their highs again, just like we are. So Australia, swing point high is 54.53, and we broke over it. And remember, this was after, we were looking at this before, this was after a small retrace into that big bar. That was the buy. We talked about it when we were up here trying to come back, that was the buy. It was the buy. You got a nice big move off of it. If you did, now You're coming into the weekly, you get over it. Yeah, this one has the volume too, so I'd probably stick with it here and see if it can carry if you're in that market. The other one for my friends up in Canada, let's see what that one did. And oh boy, what a move. Just keeps climbing. So Canada, when everybody else went on the red scare on Monday, Canada didn't even blink. There's the red scare, a doji. That's as much as you got out of here. You get over the highs, you're just hanging. This does look tired, folks, but right now it doesn't want to give it up either. Let me move over to Europe. So the CACs had broken out, and they push with volume. Yeah, so they're going to leave volume at the top if they do retrace. And you know what we're going to see next, if we see that consolidation start to take place, what you're going to see next, potentially, right, is some sort of ABCD structure try to set up to the top side, right? If you ask me what would be best for a bull market at this point, I would argue that 2 to 3 weeks of consolidation would be best. That would be the best thing this thing could do, instead of continuing to stretch. Because if you continue to stretch, A, it makes it almost impossible to buy it, right, on breakouts, and B, it makes the retrace probably deeper and even more difficult to buy when it retraces. What you really like is stair steps, right? Some sort of stair steps that give you these ABCD structures to the upside, consolidations that then break out and that can carry. But when you run straight up, 10%, it's pretty hard to carry, or in this case, probably 6%. It's hard to carry on the breakout. You get the breakout, but it's hard to carry forward. And you come back and you start doing the retest. So right now that we're doing a retest regen here, let's try to stick to the subject instead of digressing too much. So the bottom of that bar's game. It's got nice volume though. I don't know if it'll get there, but this is a retest regen. It's coming back in. It's got pretty good volume on the push back in. It's going to leave volume at the top. In fact, if it does it, I would look for a test of the bottom of that area. Let's see what the next one is here. Let's look at the DAX. So the German DAX has been weakest in Europe, and that one didn't make the highs, and volume comes off. So the DAX, I think, is actually telling us what probably is going to happen to the rest of them, and that is that this one is going to come back in. It's going to test this lower end of the range. So you got volume coming back down on the weekly. That looks like it's going to test the lower end of this thing, and that will be the real test, right? Does it hold down here? If so, then you got a nice little consolidation going on, which is what you need. That will hold back the CACs and probably the FTSE. Let's see what the FTSE looks like. And yeah, about the same thing. So yeah, I look for consolidation here in Europe, it looks like. Let's look at Asia right quick. So Hong Kong. And we got a lot of economic numbers this week, mostly industrial production and some inflation numbers. So Hong Kong is doing a retest regen on a weekly. Now on the daily, they got over and they did not regenerate lower. Well, they did initially, but then it failed and it shot right back up. This is the retest regen on the weekly. And that retest so far has good volume. It doesn't look bad at all. So let me see, that top 77 doing 76. And the breakdown bar 76 as well. Excuse me, we're doing 88 on the way up there, and now we get a pullback. All right, so well here's the question on this one, and we'll know probably by the end of this week. Are we going to get a kind of a small ABCD structure that takes it all the way down into here, the top of that big high volume bar? That would be the target on the weekly, and this ABCD would get it there, the bearish. That is if this retest and regens lower, right? And that would be a pretty good size move. The flip side, if you take the other side of that, would be an ABCD potential, if this one trades a little bit lower, right, to try to take it back up and over back to these highs. That's also possible. I mean, both of them look possible. Right now, the volume flows look pretty decent here on this push. What you'd really like to see is, again, consolidation. And given what Europe's wanting to do, and given that this is doing a retest regen and you got pretty deep into it and doesn't quite have the volume, I would think a retest or a pullback here would probably make sense. Let's look at the daily. Excuse me. Yeah, it looks like this will try to consolidate here, in this area, which is exactly what you'd like to see, because if you do that, then you can come up here and you can test these highs, right? And you got lots of highs sitting there together, right? All in the same price point range. So in other words, that breakout, if this thing can scale higher, that breakout could give us some juice and get it over the highs. But you need consolidation, and that's what it's going to do, it looks like to me. Let's see what Japan looks like. So the Nikkei, or the Topics, let's see what this one. Alright, so we're on the weekly here. It tested the highs, didn't have the volume, sold back off. Now it's coming back up, doesn't have the volume again. 15,203. This looks like it's going to fail. Let's see what the daily looks like. Yeah. So Japan, so it gets over the swing point high, has an ABCD structure to the upside, a nested one here, and then on the weekly, it doesn't have one, so actually it doesn't have one in effect right now. Gets over two swing point highs here and here, right? That should propel it up a little bit farther, which will get it into the retest regen. Let me get the price points here. So that's low is 15,146. So this is the first time into that. Top of that is 15,408. Yeah, I would think that we're going to test into that area, which is also the low here. So I would think the congruence of these two bars, this area is probably going to stop it. That's going to set up a little pullback, and then we'll see if it can pull back deeper. Going back to the weekly now, it just doesn't look like it's got enough volume to get up and over this little area here. It's barely over tonight, but I mean Friday, but it doesn't look like it's going to hold. So I expect that to come back in. So Asia, a little bit shaky. Looks like it's going to try to come in some. Europe looks like consolidation, which means a little bit of a retrace. I suspect that's going to keep us from to moving very much to the upside. So if you're asking, trying to answer that question I started with earlier about retrace versus breakouts, yeah, I think you need to be thinking on the retrace side, not the breakout side. All right, well, my time's up. We will do it again tomorrow. I am, programming note, I am out Thursday. There'll be no show on Thursday. So Monday, Tuesday, Wednesday, Thursday off. This week, probably more of a consolidation week. I don't expect anything big out of the markets for the week itself. Got to consolidate some of those big gains. Let's just see if they can hold them. Now, if they can hold them, it becomes more bullish if they can go sideways and hold this top. So if I'm looking for an area and I'm asking myself, what can I give up and not give up anything of size, right? It's this area here. You'd like to see it hold. That top really is this bar here, which is 1850 basically. So you're trading at 1878 was the close, 1850, 28 points down. Not a problem. That would actually be healthy. All right, folks, thanks a lot. Take care of yourself. I'll see you next time. Until then, I'm LA. This is and was your daily TA wrap, or actually your weekly. Have a great night. Take care. See you next time. Good night, folks.